Okay, our pump slightly stalled, and the reason why our pump, and I say slightly stalled because we're still at 96,755. The pump slightly stalled because the discussions around the Clarity Act stalled, and so that stalled the pump. And I think we need to talk about the Clarity Act and what the stall actually means, because it is the single most important piece of legislation for crypto globally, not only in the US. I know it's a US piece of legislation, but it is the single most important piece of legislation for crypto globally. And yesterday, the discussions around the Senate, around the Clarity Act stalled in the Senate. So we need to discuss exactly what happened and why it happened and what it means and which tokens it's going to affect and whether your bags are actually safe. And that's what I'm going to break down for you today. And I'm going to also show you why I think the pump's going to continue. So another big show today. And today I've really got a lot of stuff going on in the show today. It's like a big show. Let's go. All right, let's get going. 𝗥𝗚𝗢𝗪, rise and shine, guys. I see you guys all in the chat. Everybody's here again. Glenn Goldberg is here as usual. Wife Changing Money is here as usual. Davis Jansen's here. Everybody's here. We're going to talk about a lot of things, including the pump. And you know, my feeling around this pump is very simple, right? You mustn't cry because it's over. You must smile because it happened, guys. Don't cry because the pump's over. Smile because the pump happened. That's, by the way, it's Dr. Seuss, in case you don't know that. Yeah, we're going to talk about the pump and exactly why it stalled. It stalled because the discussions around in the Senate Banking Committee, the discussions around the Clarity Act stalled. They were stalled primarily by Coinbase. So they were stalled primarily by Coinbase. And I'm going to show you why, because it seems like it's a Coinbase thing and not an industry thing. And I'm going to show you exactly why I think it's happening, who's being protected, who's not being protected. Hint, hint, the big banks are there. Hint, hint, Elizabeth Warren's there, etc. Yeah, and a big show. So listen, guys, I see everybody here. I see a lot of people are starting to come back. Thank you. Thank you to all of you for helping us by hitting the like button, because you guys are bringing back all our old friends and they're all coming to hang with us again. Please help. Just smash the like button. If you're not subscribed, subscribe to the channel. Though most people are already subscribed. You guys are already part of the fam. As I said, I think we need to talk about this pump because, you know, as I said in the beginning of the show, don't cry because it's over. Smile because it happened. And right now, if I look at this pump, we're above that key area. We're at 96 and 97,000. And remember, we had such a bad year last year. It was like an embarrassing year for crypto last year because we ended in the midst of a correction. But because we started off on such a low level, we started the year off at like in the 90,000s. So far, we are actually the number 4 best performing major asset this year. So, I mean, I know it's a small victory because we came from a very low base. But there is a lesson there. And the lesson is that if you come from a low base, you're going to have, and you're due a catch-up trade, it makes for a very, very, very good year. And that's one of my theses around theses around what's going to happen this year. I think Bitcoin is going to be touted as one of the best performing assets this year. Not because it's a very good performing asset, but more importantly, because it came off a low base and because fund managers artificially measure returns from one period to another. And that's what I made a video on Crypto Insider where I actually spoke about this. And I said, we're going to have a big catch-up trade, maybe not because of the performance of the asset, but because we're going to start off a low base. When you start off a low base, people start to look at you and say, well, what's the best performing asset this year? And they're going to see things like the fact that right now, Bitcoin is the best performing asset this year. And then they're going to say, wow, you know, can you afford to not be invested in the 4th best performing asset? I mean, you're invested in silver, you're invested in platinum, you're invested in palladium. How can you afford not to be invested in Bitcoin, right? And that's exactly what's happening. In fact, if you look at what 𝗥𝗚𝗪 said, and I really love this tweet, he said, Bitcoin ETFs had their biggest day yesterday, $843 million of inflow. The 1 week now is at $1 billion and the year to date is at $1.5 billion. Bitcoin sitting at a price of 97,000 after being at like 88 for what seemed to be like half a year. It feels like maybe the buyers have exhausted the sellers. We'll see though. I do know that if we hit 100, some people are going to gnash, do you say the word gnash? Gnash their teeth so bad that they should probably go ahead and buy a free mouth guard. Peace and love. So, you know, it's a tweet which sounds kind of weird, but that's how investment psychology works. if something is moving up from a calendar date, then people say, wow, you know, like we should be invested in. And right now, Bitcoin is the 4th best performing asset. The best performing asset this year, or major asset this year, is silver. Now, the good news is that we opened up a silver bot on Pionex, right? For those of you who don't know, Pionex is a place where you can trade with bots. This wallet has been going with $50,000 since before October 10th, and it's at $133,000, which just shows you how well the bots can trade without the humans. And you can also open bots on silver, on copper, on gold, on all the commodities. I'm not going to spend too much time on the bot on the show, but if you want to join a free Discord group, it's free. It's where we post all the bots because we just wanted to separate the bot traders from the main show. Then there's a link in the description below. Just go to the description below, and what you'll see is there's a link to the free Discord where you can basically just sign up. It's over here. Just sign up to the free Discord, and you guys can get all of it, including this the silver bot, the gold bot, the Apple bot, stocks, etc., etc. Anyway, so the pump basically continues. We've broken a whole lot of crucial levels, left to go. I think the most important thing here is the following. Number one, the ETF buyers are back. You can see over 1 billion this week. Number two, the yield is coming back. Now, the yield is very important because the yield on an annualized basis shows us the demand for Bitcoin perpetuals, which is which is an important measure, right? It's a very important measure because it shows you the risk appetite in the market. The main thing that I'm seeing here is that the takers are the dominant buyers. Now, there's a taker seller and a taker buyer. Here, right now, the buyers are ruling the market. And right now, we are being set up for another short squeeze, right? So you have an interesting funding setup. The price is going up, but the funding is going deeply negative. And so this means that as we go up here, people are going short, and that could cause for a short squeeze. I suspect that as we get to the $100,000, we're going to see the mother of all short squeezes, and that's going to take us all the way up above. But anyway, for now, our pump is slightly stalled. Not a lot. It's 96,400. Oh, who pressed that? As I mentioned to you, the reason why the pump stalled is because of the Clarity Act and the fact that the discussions in the Senate House, the Senate Banking Committee failed. So now, I mean, just for those who are not American, or for those of you who are trying to understand why this Clarity Act is so important, let me give you the rundown as to why this Clarity Act is so important. It is the single most important piece of legislation of all time. Why? Because a lot of countries are waiting to see how America regulates crypto before they regulate crypto. Also, America is one of the big countries where crypto has to be accepted because the US dollar is the reserve currency in the world, and the US is probably the biggest country in the world. And in order for this piece of legislation, which is the second piece of legislation to go through, the first piece of legislation was the Genius Act. Someone said much honor. You guys remember much honor? Much honor. So these are for the real old people that have been here. Anyway, so the Clarity Act is the second piece of legislation. The first piece of legislation was the Genius Act. The second piece of legislation was the Clarity Act. The Genius Act really spoke about stablecoins, and the Clarity Act is literally designed to give people clarity about crypto. It's to give people clarity about DeFi. It's to give people clarity about what you can and can't build as a developer. It's around investor protections. It's pretty much the one act that is going to make crypto mainstream. Now, the reason why that's so important is because there are a lot of corporations and a lot of real money and sovereign money and state money that can't invest in crypto or can't invest in certain sectors of crypto until there is certainty about what crypto actually is. And when I say crypto, I'm talking about crypto, not Bitcoin. Because for all intents and purposes, people know how to deal with Bitcoin. And so the Clarity Act is actually much more. It is for Bitcoin because Bitcoin is obviously the bedrock of the industry, but it's much more for altcoins. Because the problem with altcoins is that we don't really know what's legal in the US and what's not legal in the US. We don't know how to deal with it. We don't know how to deal with DeFi. We don't know what we can pass interest rates on. We don't know what we can develop. And that's not really a Bitcoin thing. It's much more it's much more an altcoin thing. So it is the single most important piece of legislation. And the process for it to get passed as law, it has to go through the Senate Agriculture Committee, the Senate Banking Committee, and then it has to go for the final vote in the House, and it needs to be passed in the final vote in the House. Now, where are we now? The Senate Banking Committee decided to pull tomorrow's scheduled market structure following a drama with Coinbase. It seems that Coinbase has a problem with this bill. And what Brian Armstrong tweeted, he said, after reviewing the Senate Banking Committee draft text over the last 48 hours, Coinbase unfortunately can't support the bill as written. There's too many issues, including a de facto ban on tokenized equities, DeFi prohibitions, giving government unlimited access to your financial records, and removing your right to privacy. Read that word privacy, because we're going to talk about it later. Erosion of the CFTC's authority, stifling innovation and making it subservient to the SEC. Draft amendments would kill rewards on stablecoins, allowing banks to ban their competition. He says, we appreciate all the hard work by the members to reach a bipartisan outcome, but we'd rather have no bill than a bad bill. So hopefully we can get a better draft, and we'll keep fighting for it. Now, important for you to notice that the one party that's very, very, very much against this is Coinbase. And there are very many other parties that are actually very, very, very much for this, including Andreessen Horowitz, including Kraken, including Ripple, including Paradigm, and including Circle. Not only that, other people that are for it, XRP Ripple, Chris Dixon from Andreessen, Arjun from Kraken, but also Vlad from Robinhood. They're all saying, look, they're all looking specifically at what they want. So Vlad's looking at staking, and he's saying, look, staking is one of the most requested features on the Robinhood app, but it's still unavailable to customers in the US due to the current gridlock. Stock tokens are available for our customers in the EU, but not in our home market. It's time for the US to lead on crypto. He's saying, let's pass legislation, protect consumers, and let's get the show on the road. Chris Dixon is saying, let me get Chris Dixon's tweet here. He's basically saying crypto builders need clear rules for the road. Over the past 5 years, Republicans, Democrats, and Trump administration have worked closely with members across the board to protect the industry. At its core, this bill does not. It's not perfect, and changes are needed before it becomes law. But now is the time to move with the Clarity Act. So they all want the Clarity Act to move. Everyone wants it to move, but Brian Armstrong is the biggest opponent, saying we cannot sign this act into law. Remember that everyone here is protecting their interest. And I don't think that this is a perfect bill by any stretch of the imagination. From what I've read, it's not good for tokenization. It doesn't protect developers against developing things. So it doesn't have developer protections, which is quite a problem. But the main problem here, and the reason why Coinbase is actually pushing back, is about this issue on stablecoins. And I think that if it wasn't for this issue on stablecoins, things would be completely different. Now, why is Coinbase fighting so hard on this stablecoin thing? And if you want to read between the lines, why is Circle actually agreeing with this bill? So if you look at the one that Circle is actually in support of the bill. What's actually going on here? Well, what I think a lot of you don't know is that Coinbase make a lot of money from a distribution agreement with Circle. So they are a distribution platform for USDC. That's where most trading pairs are done, USDC trading pairs. Coinbase is a massive distributor for Circle. And Coinbase makes money from Circle through this thing called a USDC. Coinbase makes money from Circle through this thing called USDC Economics Agreement. In 2024, Circle paid Coinbase almost $1 billion tied to USDC distribution economics. Analysts also noted that Coinbase earned roughly $300 million in just Q1 of 2025 from these distribution payments. How the split works? Coinbase receives 100% of the reserve interest income from the USDC held on Coinbase and a 50-50 split of the reserve income off the platform. So, in other words, if there are USDC coins sitting on Coinbase, which is your USDC coins, Coinbase is earning 100% of the interest income, which is at government yields of 4% and 5%. That's 100% of 4%. In the new proposed legislation, the new proposed bill, the problem is that one of the things around stablecoins is that you may not share the revenue on stablecoin interest. And that is the biggest thing that I think Brian Armstrong is fighting against. Now, the real fight here isn't between Circle and Facebook. The real fight here is the banks. the banks want to make sure that the stablecoin business doesn't replace them. Because right now, if you look at how the banking system works, and you can listen to what Brian Armstrong said here.
Well, in that case, I think that's just the banks trying to protect their profit margin. I mean, they should have to pay rewards and higher rates to their own customers. And I think they're trying to put their thumb on the scale of regulatory capture, essentially, to prevent crypto from doing that. But my prediction is actually the banks are going to start, we're already seeing this actually, they're going to be increasingly embracing stablecoins. And my guess is that in a year or two, they'll come back and say, actually, we want to be able to pay interest and yield on stablecoins in our own companies. And so it goes back to that innovator's dilemma situation. I mean, the best banks are leaning into this as an opportunity, and the ones who are fighting it are going to get left behind.
Okay,
well,
so
in that case, I think
let's talk about what this whole argument is about. The whole argument is about the fact that that Coinbase pays 400% more interest than a typical bank on a bank account. Let's look at what that actually means. So when the bank takes your money, and the bank invests that money into treasury yields, and they earn about 4% on the treasury yields, right? So you put $100 into the bank, in a bank deposit, the bank invests that money in treasury yields or lend that money out to somebody else, and they pay you 0.39%, which is less than 10% of the profit that they earn. Stablecoins, you don't need a bank. You can put your money into USDC, and you can earn 4% by holding the stablecoin, right? The bank doesn't like this because effectively what it's doing is it's cutting out the entire banking system model. And that is what the banks are trying to protect against here. So if you look here, here is a letter urging the senators to close the stablecoin loop. And it was written by the Bankers Association of America. And it says, we are writing to you today as bank leaders of American bankers. And it's talking about what we're committed to do. It says the Genius Act, while not perfect, from a community bank perspective, was a reasonable attempt to bring stablecoin into market regulation. Among the most important provision is a ban on interest payments that was put in place to ensure that this new payments market can develop, mature without becoming a competitor to bank deposits. Under the law, stablecoin issuers cannot pay interest because allowing inducements like interest, yield, or reward could incentivize customers to park their savings not in a bank, but in a stablecoin. Congress recognized that this could significantly disrupt community lending because banks could use those deposits to provide individuals and businesses with loans that they need to expand. So you see what the banks are basically saying. The banks are basically saying, look, if you allow this, then people won't put their money into the bank, and therefore we won't have banks to help the businesses of America. Well, innovate your business model, because here you can put your money into a stablecoin and you can get 4, 5, 6, 7, 8, 9%. And the banks want to say, no, you can't do that. We want to take your money, right? We want to take your money and we want to deposit your money at 4%, and we want to fund our expenses. So this is about, the big stall here is, rest assured, everything else can be negotiated. The big stall here is about the interest rates. Circle doesn't mind, Circle, I believe, Circle have an agreement with Coinbase, but if the legislation says that Circle can't pay Coinbase a distribution fee, Circle will go, damn, Coinbase, we can't pay you a distribution fee, but that means we just make another $1 billion because we're not allowed to pay you. The law says we can't pay you. But the real fight here is actually against the traditional banking system. We should be fighting the traditional banking system here. These guys that are protecting this. And so it's no surprise that we know that the person who's most lobbied by the banks is Elizabeth Warren, and she's filed 38 amendments to the bill, and including her amendments are remove developer protections, more sanctions, compliance obligations, more illicit activity, more AML, etc., etc. She's fighting this bill because we know that she's always the one fighting for the traditional banks. So, where are we at now? The discussions have stalled, but it's not unusual for discussions to stall in these committees while people take a breath, regroup, renegotiate, and come back with slightly different drafts. Polymarket is still predicting that there's a 60% chance that this bill is going to be passed by the end of the year. Right, which is good. You can see it's the highest that it's been in a long time. Probably if you look at the 13th of January, it was at 80%, but it dropped as low as about 41%, and now it's on the way back up. The opinions that I've seen here are all saying that they're all negotiating in good faith and they think it'll happen. Mike Novogratz said, while the bill might be delayed to keep working on, I'm very confident we'll get the bill passed. I've spoken to over 10 senators, both sides of the aisle, and I believe they're all working together in good faith to actually get something done. Senator Cynthia Loomis didn't want to comment on Coinbase's opposition to the market structure legislation, but then I asked her if it would impact the process. She said, I think it will have a profound impact on the process. So I asked ChatGPT, why is Coinbase so important to this process? And ChatGPT said that Coinbase is the proof that crypto can be regulated. They're the most regulated player in crypto. And if they say that the legislation doesn't work, then it doesn't actually, then the legislation doesn't actually work. Also, that they are probably the biggest political donor to this movement. And so I guess that we need them to actually pass. It's very, very, very important that we get this act actually passed very, 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 very soon. I'll tell you why. Number one, we may be going into another government shutdown. Not sure that we are, but we may be going into another government shutdown. The problem is that later on this year, we need to get this piece of legislation passed before the midterm elections. And the reason for that is because right now, the Republicans own the House and they own the Senate. Now, we're expecting a government shutdown, 27% chance. But there is a chance here that the Democrats, there's a 78% probability that the Democrats will win the House in 2026. And if the Democrats win the House in the midterm elections, then this piece of legislation ain't passing. Now, who is the person that is the most incentivized person in the entire world to get this passed? David Sachs. Because he's the crypto czar. He's got his reputation on the line, and he wants this to happen. And what he's saying is saying, the passage of the market structure legislation remains as close as ever. The crypto industry should use its pause to resolve any remaining differences. Now is the time to set the rules of the road and secure the future of this industry. So, I believe that this thing should get passed. 61% chance it'll come into law in 2026. It is the most important piece of legislation if we want a free ride and a good and smooth ride in crypto. We need the US to regulate substantially. And so, now that is why the pump stalled. And now the question becomes, which tokens will be affected by the legislation actually going in or not going in, right? Because if it doesn't happen, there's certain tokens that actually benefit. One of the tokens actually that would really, really, really benefit from the Clarity Act not passing is Monero. Because the Clarity Act basically hates Monero, right? The Clarity Act is not going to allow illicit privacy like Monero. And that's why when the talks fell, Monero started to absolutely explode. Now, 𝗥𝗏𝗧𝗧, can you do me a favor?
Yes.
Can you put the video live for me? Not yet.
No, it's 20. It'll be. Let me see if I can jiggle it.
So I've made a video, which I'm going to post on the other channel straight after the show. But by the end of the show, I've made a video, and I've actually compared Zcash to Monero, because if the Clarity Act passes, it's really good for Zcash. If it doesn't pass, it's really good for Monero. I made a video and I did the ultimate showdown between Zcash and Monero. Is it live?
Yeah.
Do you want to see? Okay, so can you put the link below, and will you just send me the link? So I've made a video right now, which I've dropped on the other channel, on Crypto Insider, about which is the better privacy coin, Zcash or Monero. It's the ultimate showdown video. If you can just WhatsApp me the link. It's coming. That link is coming. Other tokens which suffer, by the way, are any token that has 20% controlled by one wallet or by one group of people. They deem those tokens to be securities. So Arbitrum, Uniswap, Optimism, Lido, they have, well, Lido doesn't. They have BNB. They are all deemed to be securities. Why? Because they all have 20% impact rule. So you got to keep watching this, because if the Clarity Act passes, not good for these tokens that have this 20% ownership rule. Okay, you see the beautiful video? The ultimate showdown. Look at this, masterpiece. In this video, we're going to have the ultimate showdown. We're going to compare Zcash to Monero to find out which is the best privacy coin. This is a 21-minute video which you guys can watch, which is it's on the other channel. There is a link below, or there will be a link below in about 30 seconds to the new video, and you guys can actually go and watch that. So the 20% control tokens, that's not good if the Clarity Act passes. Monero, not good if the Clarity Act passes, which is why as soon as it wasn't passed, Monero actually took a big jump. Otherwise, let's look at how the other altcoins actually responded. You can see quite a red day in general for the altcoins. The one altcoin that actually really went up yesterday, we didn't discuss it, was ICP. Internet Computer. You remember why we like Internet Computer? Because it has this AI tool, which is called Caffeine, which allows you to basically create a decentralized app using AI. So anyone can vibe code a decentralized app, basically within 20 seconds flat. Now, yesterday, they published a new white paper, which actually deals a lot with emissions, right? So you can see I didn't feel like reading the white paper. So I asked ChatGPT to read it for me. And it basically says it reduces the ICP inflation by 70% to the end of 2026. The net thing here is that ICPs basically reduced the inflation by 70%. And that is why the ICP price actually pumped. Now you can see that, I'm not such a genius. There's no way that I was going to read this long white paper. It's a massive, just look. They basically sent us this and they said, this is what we've done. I was like, excuse me? You want me to read this long white paper? I can't even read a bedtime story. That's how bad my ADD is. So what I did was I gave it to ChatGPT. I said, ChatGPT, just summarize it for me. Here's the 5 points. And now I sound really, really, really smart. And that's the thing with AI, right? Like in the old days, we could process information. Humans can only process a certain amount of information. And then if you think about what my job is, I read and read and read a lot of information with 10 researchers. That's all I do every day. That's all I do. I read information with 10 researchers. I process the information. And then based on that processing of information, I make portfolio moves and I tell you guys what I'm doing and why I'm doing it. And that's what you guys call alpha, right? But I think we have to understand that AI can do that much better. Because I'm emotional. And the reason why I know that I'm emotional is because I take trades too early. Like you can see that I took the lighter trade slightly too early. I should have probably gone long today instead of yesterday. But I went in too early. Because why? Because I'm emotional, right? But AI doesn't have emotion. So ultimately, I know that one day I'm going to get replaced by AI. Why? Because there's going to be AI is going to be able to process more information than me. It's going to be able to make decisions without any emotion. And it's going to be able to act on the information without any emotion. The problem with that is that AI is not likable. So the problem is that AI is not, it's too perfect. It's not human. It's like plastic. It's not likable. And so we at Banter wanted to change that. And so for the last couple of months, we've been working on actually creating an AI host that is actually likable. He has a history. He has a dog. He has a girlfriend. He has a story. He's not perfect, but he's an AI host, and we've brought him to life. His name is 𝗥𝗚, and I want you guys to meet 𝗥𝗚 and to see his new video. Now, by the way, this is like the first real video that 𝗥𝗚 has posted, and you can see that this video has absolutely exploded. It's already got, the last time we checked, had 4,000 views. Now, just listen to this. This is how good 𝗥𝗚 is.
Did you know that just 7 stocks are responsible for 42% of the S&P gains? They're called the Magnificent Seven and include giants like Google, NVIDIA, and Tesla. These are the most important stocks in the world, and they are the stocks which drive the markets. Well, have you ever thought about this happening in crypto? If we got the Mag 7 of crypto and you invested in them today, the returns would be incredible. Think about it this way. The S&P returned 5x since the year 2005. But the Mag 7, they returned 250x. So if you invested just $10,000, it would now be worth $2.5 million.
So 𝗥𝗚 has made a video, and by the way, he scripted his video, and obviously we helped him a little bit with the editing, but 𝗥𝗚 made his own video around the 7 altcoins that will become the Mag 7 of crypto. Now, again, I've left a link for you guys below so that you guys can actually watch 𝗥𝗚's video. But support 𝗥𝗚 for us because we're trying to build a real AI host that can give you guys a whole lot of alpha. There's the link over there. Have a look at it, and there's also the Crypto Insider channel around with a 𝗥𝗚 video. Go and check it out. Go and check out the 𝗥𝗚 video. Go and check out the 𝗥𝗚's video. Honestly, let me know what you think of 𝗥𝗚. Seriously, let me know what you think of 𝗥𝗚. Like sometimes, again, someone said, please don't create 𝗥𝗚 coins. We're not creating any meme coins, nothing like that. We are trying to see if we can create a real AI influencer that you guys will actually connect with and can be part of our amazing host community. Someone says shirtless would have been better. All right, let's quickly track our trades. I did mention to you we'd be taking some trades. So the lighter trade we got into a bit early and the pump stalled. I'm not worried about it. I'm still holding it. NEAR and Zcash, very confident in my positions. Our trading portfolio, it's a $50,000 portfolio. It's about $600 down. Still holding exactly the same trades, no changes as yet. I will update you guys if we ever have changes. I think that's it for today. See you guys again tomorrow. Until then, trade well, my friends.